Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence. She joins us to discuss how to get exposure to the modernization of the electric grid theme. Sanjana, it's great to see you as always. Welcome back to Trade Talks. And before we get into your charts here, give us an overview of this industry.
Sure, Jill. So we've been covering several mega trends in our trade talks earlier, and this time wanted to focus on the electric grid. And actually, just a couple of days back, I picked up the local newspaper and came across an article that talked about the electric grid in Michigan, where I live, which is up for a major upgrade. And this piece was actually quite timely because we had a major ice and snowstorm, which left more than 600,000 people without power. And Michigan actually has among the least reliable electric grids in the country. And much of the grid was actually designed much earlier for a much simpler life and is due for a major upgrade. So just wanted to focus on some of the efforts to modernize the grid based on advances in big data, AI, and other technologies that we have been highlighting before. And to get exposure to this theme, wanted to highlight an index that we have called the Nasdaq Clean Edge Smart Grid Infrastructure Index, ticker QGRD.
Tell us about some of the companies that make up the index.
Sure, Jill. So with this index, we have a combination of both pure play companies focused on the smart grid and diversified multinationals with smart grid exposure. So these companies are involved in digitization, providing smart meters, smart substations, and even connected mobility. And what's unique about this index is that it gives exposure to ancillary themes, things that we've been hearing about: renewable energy, electric vehicles, IoT grid devices. So we have an index here that supports multiple themes, and that's something we wanted to flag. And in our first slide here, we wanted to show you the top 20 names, which make up about 79% of the index weight. And some of these names might be familiar to you. I mean, you have heavyweights like Tesla, which make up about 2% of the index weight, and they actually provide grid-scale battery energy storage systems besides, playing in the EV landscape. We have a company called National Grid, which has an index weight of 8.3%, the highest weight, which operates England and Wales electricity infrastructure. And this is a pure play company that we referenced earlier. And then we have a company called Aptiv, which is not a traditional pure play, but rides the connected mobility theme with an index weight of 3.75%. And this is leveraging the theme of sort of autonomous driving. So this gives you an indication of the range of companies that we have that are involved in modernizing the grid.
And many of these companies have seen their losses reversed to gains this year.
Yes, and that's something we wanted to highlight in our second slide here. So as you can see, about 70% of index constituents have seen losses reverse this year from last year to gains this year. We have 13 companies posting double-digit gains and 5 companies posting single-digit gains. And as you can see, what stands out here are 2 companies, NVIDIA and Tesla, which showed dramatic reversals from losses of 50% and 65% last year to gains of 90% and 68%. And only 2 companies in this top 20, Johnson Controls and Enphase Energy, have registered declines. And as has been reported widely in the media, Tesla stock has jumped largely due to rising EV demand and announcement of price cuts. And we see NVIDIA stock also higher this year as some of the headwinds that drag the stock down, like the slowdown in the PC market, have sort of receded. And that's something we wanted to flag. And I think what's most interesting about this slide is the performance dispersion. When we are unlikely to see a single set of factors drag companies down uniformly, you have companies that are exposed to various sub-themes within the modernization efforts of the grid. And that's something worth noting.
So it sounds like this is a very large cap heavy index.
Yes, that's right. So as you can see in the next slide here, this is tilted heavily towards large cap with about 90% of index weight consisting of large cap companies, followed by mid cap with 10% and small cap with just about 1%. And again, what we see here is all three subsegments were down last year, with large cap declining the most. And this is actually the largest segment. It has 44 names, of which 31 saw declines in 2022, largely due to the supply chain challenges and weakness in China. And again, large cap here was consists of both NVIDIA and Tesla, which, as I highlighted before, had losses last year, which reversed to strong gains this year.
And finally, when you take a look at the different sectors that the index has exposure to, where is it most heavily tilted?
Sure. So as you can see, it's heavily tilted towards industrials. So this segment actually has 40 constituents and corresponds to an index weight of 50%, with the likes of large diversified companies such as Honeywell, Siemens, General Electric, Hitachi, ABB, Schneider. So these are large players which have exposure to the smart grid. They are not pure play names. And they provide sufficient diversification within the theme. And as a segment, you can see they were down 6.7% in fiscal year 2022 and up 11% this year. Last year, we had macroeconomic headwinds that largely weighed on the sector. And what's also interesting here is you see the utilities segment. That comes to mind when you think of the electric grid. That is the segment with the second highest index weight of 19% and has the likes of companies like National Grid, which we highlighted earlier, Iberdrola, which is a pure play in renewables, and Verbond, which is an electricity provider through hydro and thermal. And this segment was down about 0.7% last year. A couple of other things I wanted to highlight here. You see technology with a weight of 14%, which was down about 19% last year. We cover this a lot about how tech was down last year, largely due to multiple headwinds that weighed on the sector, including a slowdown in the PC market. And this year, we see that it's largely recovered its losses and has been up 29%. And much of the other segments you see have very few index constituents. Like, for example, basic materials has just one name in it, and telecom has two index constituents.
All right, appreciate the insight. As always, Sanjana, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.